The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, it's going to be a big day here on 100 South Broad Street at the offices of Duke and Duke. We've got several things going on. Let's start out with the stock market last night around midnight, 12:30, 1 o'clock in the morning. I believe it was New York time. We made a three drive to a bottom pattern in the S&P, as you can see down there at that 2032 level. We promptly rallied 20 handles, but that's not what started it, folks. If you look at the second chart that I posted, you'll notice that it was the DAX. The German DAX was not able to go down to a new low. It stopped exactly at the 786 to the exact tick of the previous day's low, and then it turned, and that's what turned the S&P. I happened to be watching it at that time. At the same time, the Hang Seng had opened lower by about 140 points and immediately turned around. So it was coordinated. It was about, I don't know the exact time, but it was around 12:45 or 1 o'clock. And away she went. And now it's had a pretty good rally. Folks, I have not seen, I spent a lot of time this weekend over the, oh, by the way, one other thing I wanted to mention. If you'll look down at that DAX chart that I posted, you'll see those little cycles that I posted, and those are just nominal cycles. In other words, you try to match the low to low. That's really all it really means. But when we're talking about cycles, we are going to have a couple of guests here in the next week or so. We're going to have Richard Mogi from the Foundation for the Study of Cycles, one of the brilliant minds in cycles, and also his partner, Stephen Bush, will also be on a little bit later. I remember speaking with Richard just not too long ago, and he was telling me about how lucky I was to run into somebody like Shane Smillian at an early age, and I said, yeah, I wish I'd have got him at 13. But he was really impressed with the work that Shane has done. So we're going to have Richard Mogi on and also Stephen Bush, which are two very, very bright fellows in the cycle field that used to be with the Foundation for the Study of Cycles. Getting back to these charts, what I did was I always talk about these 100 stocks or so that make the market go up and down. And so I decided to just, go in and start to take a look at them. And I started, really with the FANG stocks. These were the ones that were, your, what do you call it? Doggone it. What am I trying to think? Hold on a second. It's, your Facebook. Yes, I should get Chris Carolyn on. I know Chris, and I'll try to get him on, and I will certainly try to do that. There's a lot of people that I'd like to get on. I'd like to get on Connie Brown, too. But these folks get pretty busy, and they don't have the time. We were lucky to get Barry Rosen last week. We also had our regulars of Shane and Shane Smolian of WorthTrader.net and Norm Winsky of AstroTrend. All three financial astrologers say that, we should have a down move during the week, and sure enough, we did. That ended Sunday night. Now, where it's going to go from here, we don't know, because you're basically looking at a market that is going to tell you that you're in a spot where you really don't know whether you're going to have a big move up or a big move down. And that's where we are today. First of all, I want to run through just a couple of these stocks. I did all of them. For those that get the newsletter, I attached them so that you could see that all of these stocks that we're looking at are in bearish modes. The first one we'll look at here, of course, is Netflix. As you can see, it's made a 50% and a 61% retracement from the highs that we made back in December and then also in January. That's another negative one that we have, moving in that direction. Another one of the FANGs will start out with, should spell it correctly, FANGS, is Facebook. And that one actually is, has already turned the corner and started to move down. Now, all of these stocks have rallied overnight and are up marginally a little bit. So, but these are the stock you can see with Facebook here. You had a big 3 drive to a top pattern. Then you had a double top where your ABCD was equal, telling you that something really really big was happening. And then we have Amazon, which is the A in the FANGs, and you'll see here's another one that is going to be really interesting because it's been at this really strong 78% level from the January highs for quite a while. That's about $8 from where it is right now. It's probably trading up $1 or so given what everybody else is doing. But all of these stocks, I went through every single one of them, and they are all looking very, very, very susceptible. We'll take a look at Google, and you'll see this one also. This has been one of the stronger ones. This one in Starbucks of the FANG stocks. This has been one of the one of the stronger of the FANG stocks. But as you can see, this one also, but Google, if you look at it closely, you'll see the head and shoulders pattern that happens to be there also. Now, whether these work or not, I don't know, but boy, they are all spot on bearish. I mean, they really are. As it's just really an incredible run to see it move the way that it does. So anyway, those are the ones that I was watching, excuse me, over the weekend to tell me that, wow, this thing really looks bearish. And then what I had our good friend Jim Bartolione do from V50 Partners was to put in his New York Stock Exchange chart that he's always shared with us that looks so interesting because if you'll compare. Oh dear, what happened here? We got a problem in River City. No, River City just got fixed up. We're all right. Okay. If you'll take a look here at this New York Stock Exchange index chart that we've watched now for quite a few months, we've just rallied to a 61% retracement of the high, just like we did back in 2007. And the time is a little different, but the pattern's the same. So if this is correct, we shouldn't get much higher than where we were last week. And if we go blowing through 17,800 in the Dow, it's time for the old Tucson cowboy to pack up his old duffel bag, put it in the back of the chuck wagon, and head out into the desert, not to be seen from again. Because, folks, these things look so darn bearish, it just absolutely is really, really scary. That doesn't mean it's not going to work. One stock that I have to really share with you that looks extremely bad is one of the big ones, and that's Walmart. And if you'll notice here, for the past year and a half, this stock has been in a massive downtrend. We just completed last week, we completed a perfect 382 retracement from the high of January of 2015, and that was spot on to the tick at 69.45. We're now, we traded Friday at 68.06. So these were the one. I mean, all of these were hitting really big numbers. Now I'm a big person that watches all these things, but I don't know if they mean a whole lot or not. Okay, we've got to take a break to pay a few bills. 877-927-6648.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no questions asked money-back guarantee guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to put the pedal to the metal and get into the big opera house where the fat lady is singing. We are looking at gold. We're up about $12 tonight. We're up about 13 or 14 a little earlier. Silver has actually moved actually a little stronger than gold today. But you'll notice that the number that we were watching last week, that 1256 level, the high last night so far was 1256.10, I believe. And if we get too much above that, not more than a couple of dollars, this thing could go to the, take off quite a bit. That's the way it looks like, but we have to wait a day. The real key here lies in the news that's coming out about one particular index, and I'm going to talk about it next, and that's the XAU, the gold and silver stocks. If you'll notice back down here in 2016 at the end of January, around near January 20th, it was about a week before we was the anniversary of the high in gold, which was January 20th of 1980, and this was I believe we had January 16th is when we made our low in the gold market. You'll notice we made that butterfly pattern in the XAU, and then we had the big move. It's you can see how much it's moved on a percent basis, well over a 50% move. So what we're seeing now, though, is you'll notice that we've had a couple of butterflies that are forming. We're going to be a little bit higher today, just because gold is stronger, so we should get up to that 1.27 on these. So my assumption is to wait a day. But folks, if we break out above the the 1258 level in gold, I've missed the bottom. I really wanted to buy it at 1290. I bought some at 1212, but I only took a little bit out of that, and I tried to buy it last night, but it didn't open lower, and it jumped really quick on the opening, about $4. And so you really had to have your order setting in there on a buy stop, or there was just really no way to get in it. So we could be getting ready. I mean, this could be the this could be the big Gamilla, and I'm going to wait a day or so just to see what's happening. I have a very, very poor record of buying breakouts. That's probably the understatement of the year. I just don't do that. I've had a question from one of our dinners about the DAX. Do I trade it? And the answer is yes. It's a very good vehicle for trading. Sometimes it's the dog, and sometimes it's the tail. Last night it was the dog, because that was the market that turned everything around. It turned the Nasdaq around, excuse me, it turned the Nikkei, it turned the Hang Seng around, and it turned the S&P around. The S&P was a really nice three drive at the bottom there at 2032, and it rallied 20 handles. It hasn't stopped rallying yet. So we'll see what some of these things are going to do over a period of time. Okay, we've had a request to cover a couple of commodities here, and I'm going to do one right now, which is sugar, the sweet, and we'll get that on the charts here, and you'll be able to see that we're very, very close to a 61% retracement here in the sugar, and we'll see if that's worked. What's so nice about this sugar chart is I don't trade it very often. I didn't even trade it back last September when it was doing that 20-minute line, as you can see, where we pulled back to a 382 retracement, and it was really a nice move. But watch it now, because we did make a 78% retracement of the yearly range, and now we're pulling back to a 61% retracement, down around 14 bucks a pound. So if you like sugar, keep an eye on it. It trades well. It's all electronic now, so they don't have the shenanigans that they used to have at the New York Commodity Exchange in the softs. Cocoa, sugar, coffee, cocoa, all orange juice, all of those are known as softs, and boy, they were run by about 5 families, their cousins, nephews, and aunts and uncles, and it was really tough to get a fair shake. But now with electronic trading, that's all to the wind, and it's much easier to do that. I still don't need it, because we have the currencies, and that's the one that looks very, very interesting. So we'll watch that as we go through. I have a really nice chart here from Jim, and I cannot find it. I put it in here 3 times, and I'm still not able to see it. But I wanted to show you the work that he had done on the Swiss franc and the harmony that's there. And frankly, I can't find it. But maybe one of these days in my lifetime, I probably would, and then we'll be able to see what's going on. Okay, now we are going to see the next question that someone had was about the gambling stock from Steve Wynn. And that's had one heck of a move, folks. We'll just move this up here so you can see here. If you want to see something, this is a long-term weekly now in the Wynn stock. And you'll notice that we had the big ABCD butterfly pattern up there. It hit it spot on perfectly at $2.50 a share. That was the high, and then it went from 250 down to 54. I think that's more than a 10% correction, but I'm not sure. You can see what's happened to the gambling business. And now what we're doing is we're rallying back, not even to a 382 retracement as of yet. This tells us that things must be looking a little bleak in Macau, or maybe it's all over and it's getting ready to turn. We'll have to wait and see if that's going to be the case. But we'll watch that as the day unfolds. The grain markets, we're still keeping an eye on those. We're starting planning now in corn, and beans will start here around the 1st of May, so we'll be keeping an eye on those. Beans have made a little bit higher high than the previous day, which tells them that that we'll be able to look at what we're seeing in a longer term time frame in beans, and also in corn. Corn has actually held up a little bit after the big surprise in the crop, where they were going to plant everything except the stuff that is on the freeway, but who knows? We'll see. But I don't think the grains are quite ready yet. The ones that look the most interesting to me are the currencies, with the euro, and that looks really interesting. And then also the Japanese yen, folks, and that's also related to the stock market. And, we've had a tremendous move in this Japanese yen to the downside. The whole world wanted this, quite a while ago. And now what's happening is we've got a really, and this is another one of those instances where we're looking at a 20-minute line. We don't see them very often, but when they come in at these fib numbers, you got to pay attention to them. And if you look at this, this is going back over the last 16 years. And so this is going to be coming down to touch the 107 and change level. We hit 107. I believe it's 106 and change. Excuse me. We hit 107 and change last night. We made another low. So we're still drifting down towards that 106 level. So pay really close attention to that 106 level on the yen, because that's going to give you a the second 38% retracement that we had in this since 2011. I mean, hello. I mean, you know, that's about as bullish as you can get. So watch it. This is going to be real interesting down here at this level. That's at 2006 and change. Let's try it again. 1006 in change. 106 and change in the end. Time to hang up the old microphone.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of coffee. One of our listeners evidently not only drinks it, but he trades it. And so this is a chart of coffee. As you can see, we are at a 78% retracement of the low that we made in March. We're also at a 61% retracement of the low we made in January, and we've also touched the 20-minute line going back to last December. So coffee should hold this 119 level if it's going to be any good. It's rallied a couple cents off the bottom of that, but I don't think that qualifies enough for being a bottom at this particular time. So you need to be very, very careful with the coffee, and you have to be careful with everything, but it's particularly true of watching the coffee. That's another thing that we want to watch. All right, we have the one thing that I wanted to mention, when I was doing all these charts over the weekend of all those 100 stocks, those 30 Dow stocks, and then the 30 Dow stocks, and then I did the 25 NASDAQ stocks, and then the 30 or 40 of the S&P stocks. They're all in very, very bearish modes, but that doesn't mean that they can't go higher. And you get surprised a lot in this business, so you want to be able to be aware of that. Now, the two things that happened last week that I think were really important was the fact that we had a beautiful Gartley pattern right at the 61% retracement in the Treasury bonds. As you can see, we made the butterfly pattern back in February. We came down into March, and then we rallied for 3 weeks, stopping exactly at the 61% retracement. Well, it wasn't exact because the number was 67.04, and the bonds went to 67.06. But now they've started to the downside. They're trading a little below 166 now. So we'll watch that one also, because that could be turning. That means interest rates would be going higher. Nobody thinks that can happen, but maybe the charts, could be right or not. We'll also take a look here at the Treasury notes, and you'll notice here that we have had some really nice fib numbers hit on this thing over the past year. We had the butterfly pattern up at the 127 and 1.618. We had to move down to the 61% retracement, and then we moved up to the 61% retracement, and that sets up a potential ABCD pattern, and it would also complete a 135 pattern. If you'll notice real closely on this Treasury note chart, you'll see the 135 pattern that we had in June, where you had the higher bottoms. You had another session in December and January where you had higher bottoms, and that 135 pattern is very, very powerful, especially when it's very symmetrical. In other words, the lows between 1 and 3 and 3 and 5 are almost the same time. That sets up some really nice symmetry that gives you a little bit extra confidence that, yes, this is the spot where you want to be able to take a look at it. I've also been asked, this seems to be commodity day in here because I'm getting a lot of questions about the commodities. We'll take a look here at the copper, and as you can see, we've had the move off the bottom from down to the 192 level. We rallied up to $2.31 a pound. We since backed off to a 61% retracement at 207. We did rally a little bit last week, but we're back to that 207 level again. Any close below 206 or 205 would tell us that we're most probably going to drop at least another dime, down to that $2 or even below. So it's very important that the copper holds this 207 level to see if it's going to hold the level. With the strength in the gold and silver today, it didn't really carry through with the copper as of yet, but it still has a chance. But it's hanging by a thread. That's about all you can say. Now remember, copper had come down for 3 weeks with almost just one up day in a 3-week period. That is incredibly bearish. That doesn't mean it can't rally, but it's telling you that there's a whole lot of selling coming into that copper market. Whether that's related to China or not, I really don't know. So we'll take an eye on it and see what's going to be looking at it for the rest of the day. Oh, I've had a request on the DAX again. Let's just put this up again. Someone's asked me to explain the DAX again, and I'll certainly try to do that. This is the DAX on a 60-minute chart. Folks, basically it's the same as the S&P. They have their own stocks in there, Volkswagen, Deutsche Bank, and a whole bunch of others. But this is the S&P of Europe. And as you can see, it follows the patterns and ratios very nicely. You can see the 3-drive pattern that we had on the high, back on the 23rd of March. And then we had the big breakdown, the first stop. The AB leg stopped exactly to the tick at the 61% retracement there at 9,700. Then we rallied up to 382 and then back to an ABCD pattern that completed down there at the 9,500 and change level, and now we had a pretty good rally. That what I was trying to show you is that cycle. If you'll notice the cycle low, that's basically just an hourly cycle, so it's about a day and a half. And coming in on Sunday, you'll notice that it came down and stopped exactly at the 78% retracement level at 9,553, and then promptly rallied 200 points. And that was the key to the markets. Right after that, Hang Seng took off, and then right after that, the S&P. Within about 5 minutes, they were all, it looked like it was coordinated, and maybe it was, who knows, but that's what the DAX is doing. On a longer-term basis, this is still in a really strong downtrend. The high on this was 10,200, I believe, last year sometime, and so we're down a great deal, from that letter. So we'll be able to see, what's going to happen. It's still early in the morning. We've had a 20-point rally now off the bottom in the S&P, and that, any market that can give you 20 points on the upside can take 20 points on the downside. So just be patient and let all this other stuff that you hear about fall by the wayside, and try to trade what you see and not what you think. Thinking is what gets us in trouble. Everybody has an opinion, and ours are usually the wrong way, and so you want to be extremely cognizant of that as you go through these things and watch them unfold. I wanted to share with you one other thing, and that is show you the difference in the price of oil and versus the U.S. dollar, and you'll see that this has really got a high correlation. This is from our good friend Byron Tucker from Tucker International, and we'll put it up and let you see. Oil price should rally as the dollar weakens, and of course we've had a little bit of a weakening dollar, but not that much. We've seen the dollar come down a little bit, but nothing like what the price of oil has done. So keep a close eye, and if you'll look at the price of oil, of course, is in the red, and the dollar index, of course, is in the blue, and it's got a really good chance here to turn. So be careful of making too much of a correlation on this. It just shows that it can happen, but not all the time.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, let's take a look now at the crude oil market. We've been watching this for quite a while. Here's a situation where we had the 20-month line come down to the 382 level at 35.50. From that level, we've had a pretty good rally. We've rallied about $3 a barrel. Actually, it's been $4 a barrel because we got above $40 a barrel, and we're trading above $40 a barrel right now. That sets up a potential ABCD swing up to $50, and $50 a barrel will be the 61% retracement of last year's high that came in at 62 and change. So this is going to be a very interesting picture because it's got a lot of things going for it, not just the fact that it's had the 20-month line, but that 382 retracement, a very, very shallow retracement after a 2-week down move, and then coming out of here very strongly certainly suggests some power that once we clear $41 a barrel, that we'll be probably looking at $51.50 without too much trouble. Now, will it be straight up? Of course not. There'll be some backing and filling like it always does, and that's what you want to try to do. Is if it starts this breakout period, I'm very bullish oil, and if it starts this breakout period, you want to be able to pull back and look for this like a 2 or 3 day pullback with a nice ABCD pattern in it, and then you'd have a pretty good chance of finding something that fits within your risk parameters, because we don't know where these markets are going to go ever. The only thing that we can do is protect ourselves by using a pretty good idea of what's going to see what's going to happen. We have a question about IBB, and that has been one of the weaker indices that we've had all along. This used to be the leader. IBB and the financials used to be the leader of the pack, but that's not happening recently. As you can see, since last August, this has been in a series of really strong lower highs and lower lows. So we just completed another Gartley at the 289 level, and it looks like this is also wanting to head lower. All of these charts look alike, folks. Now, if the Dow gets up 200 or 300 this week, this is all going to be for naught. But boy, these patterns, they sure look flat out bearish. And it's going to take quite a bit to change that, but that can certainly happen. So we've got to be able to, watch what's going on when we're looking at these. But the IBB had been the strongest, during the up move. I think it went from somewhere like 140 to 400. So that's been a really monster one. So we'll see that, and we'll see what's going on. Someone asked if I was able to buy the British pound last night, and the answer to that was no, because I only look for patterns that allow me to buy something at a very, very low risk. And the pound was very strong all night, and so there was no way that I could actually do that. The one thing that I was doing is I did see the bottom coming in the stocks, which was pretty good, and that was happening at the same time that the bonds were making a 61% retracement of the range from Friday through Sunday night. They rallied up to 66 and change and promptly dropped a point. So both of those, worked okay overnight. But I had a particularly strong interest in what was going on with gold, because gold's got, you can't mess with the gold market very much. I mean, you say you can, but if you look at the numbers, golly gee, folks, I mean, these numbers follow these patterns like, they were done, 4,000 years ago. And, it went right to the exact number, 1256. And that was off the ABCD at 1212. And so you have to assume that this is some type of a major spot here. But if we get above 1260, this thing is off to the races, and going to be a really big race too, because this thing's got a chance to run, a great deal to the upside. But it's still a little bit early. We've had a question from one of our dinners about wheat. Wheat should have had some good support at 460 a bushel. Last night, wheat broke below the 460. It got down to 454. At the same time, beans were up a little bit. Corn was about unchanged. So there's not really a lot happening yet in the grain markets, but that's going to be changing probably sometime in the next few weeks. And we're watching for a really strong patterns to unfold, but right now we don't see that too often. So we'll just have to wait and see. Okay, now we'll have to wait and see what's going on here, and we'll check in and see what the markets are doing as we come into the next break. We've got the gold is up now $11, looking really strong. Silver just made a new high, so that's looking pretty good. We got the S&P up 9, the Dow Jones is up 100. So things are rocking and rolling. So it looks pretty good that we're probably getting ready to break out here in gold. But you got to wait. You got to get it above 1260. I'm sorry to wait for that number, but it's just an interesting number that should be respected. Let's just put it that way. But with the gold stocks acting as strong as they are, that's important, because those fellows don't do a whole lot of. There we go. We just had a nice big run in gold here, making another big run. So we just got up to 1257. Still 1260 is the number we're looking at, folks. We're not too far away, but 1260 is the number that I'm watching very, very closely here. So we'll keep a close eye on it to see if it's going to do that while we're on the show or not. But we'll have to wait and see. It's important that these XAU, these stocks have been so strong. Let's get up there and show you that, because that's unusual, folks. That for them to be leading the gold market is very, very unusual. So just keep this thing could really go. That's all I can tell you. And I'll be watching for a pullback. That's the bottom line of what we're going to be looking at. But this is what we're trying to see at the present time this morning. Someone has a question about the weather. It's changeable. And about the most they can do with the weather is predicted about 3 or 4 days in a row, 5 days at the most. And in certain parts of the country, it's almost impossible to predict the weather, i.e. the Midwest and some of the other places. In the desert areas, it's a lot easier because of the prevailing currents and stuff, but weather is pretty tough to really get something done with. We're going to go to the euro here as we come into the break, because that's another one that looks very, very interesting here with the pattern that it has. And we'll bring this up to let you see it, because this is all related to the dollar, which are probably related to stocks too. But as you can see at this, we have a big ABCD pattern in the euro coming in at the 114.60 to 114.75 level. And that'll be an interesting one if we're able to get up to that particular spot. But it's a very, very nice pattern over the past 5 months, and it should lead to a pretty good correction in the euro versus the US dollar. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're starting to pick up steam in the market. We're up 13 now in the S&P and 120 in the Dow. Gold's up 13.50. Silver's up 44 cents. Remember, 1260 is the key level to watch in this gold, and we'll see if what's going to happen. The number we were looking at, of course, was 1256. We're trading a dollar ahead of that right now, but we'll see if that's going to go blasting through or not. It's all about probability and risk control. Try to do your job with that. Remember, any market like the S&P that can go up 20 handles overnight can come down 20 handles. So wait till the pattern that you're looking for fulfills and then go for it. Don't try to have an opinion, because those are the things that get you into trouble. So you got to just watch what the charts are doing, and that's the real key. That's why the importance of the close today in these metals is so very important, because they're getting everybody coming in to buy the gold and silver stocks, and they couldn't get anybody to buy these 2 months ago when they were on their bottom in January. Now the whole world wants them, so we'll see what's going on with that. I want to end the show today with our chart from our good friend Jim Bartolione, so we don't lose track of the big picture. And we'll put this in one more time. This is the weekly chart of the NYSE, and basically what it'll do is it'll show you that Tom's smart. He's been buying them all along. He's been buying the gold and silver stocks all along. So buying them up here, you're just adding to winners, which is not a bad idea. Okay, this is the stock market. We still made that 61% retracement in the NYSE. We're quite a bit under that. We would have to have the Dow rally more than 300 points today to take out that high on the NYSE. Whether it's capable of doing it or not is still under advisement, but it looks like there's a possibility that it could if we're strong, all week long. But early in the morning on a Monday does not make a whole week, so be careful with it. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.